Hey team, it's Vince. I'm sorry I dropped off there for a moment.
Over to you, Vince.
All right. Well, look, first of all, I want to thank the guys at Phillip Futures, especially Sri, who has helped support us in this series of webinars. They've become our best collaborative partner in Asia Pacific, and it's been a real joy working with you guys in helping promote these products on our exchange. I wanted to just take a couple moments of the seminar's time to talk quickly about the average daily volumes that we've seen in the contracts and about a new contract that we're going to be launching, or rather, excuse me, that we've just recently launched on ICE Singapore in mini Singapore dollars. Anyway, Ming, if you would flip over to the first slide there. And there we go. We have, once again, as a reminder, we actually built ICE Singapore in response to the regional demand for a retail venue with a lower barrier to access to trading than some of the other futures exchanges. This is also in response to some of the client input we received about our market data fees. So the first thing that we decided to do was eliminate all market data fees for the exchange in ICE Singapore. So all of our data is free on the exchange. There's no extra charge for it. And Phillips, your broker, will enable you to watch the market data on ICE Singapore with a simple request. In fact, I think if you go to your Phillips in-house systems now, you'll find that the data is enabled for you on a trial basis. And all you have to do is notify your Phillips account executive, and you can keep it going on through the rest of the year of trading. We also decided that the contracts should be cash settled. We didn't think anybody wanted to take delivery on any of the commodities that we might list or on any of the financial products. So the products are cash settled, and they're indexed in their settlement to the other ICE exchanges. For instance, ICE Europe, where Brent is listed, and ICE US, where the US dollar index is listed. They govern the settlement prices for the ICE Singapore contracts. And in fact, as you'll see, they also hold the contracts in a range through arbitrage, where the depth of the big markets is actually translated into the depth of the mini markets that we have here in Singapore. So the market depth and resilience is always deeper than you see on the screen on ICE Singapore, because it's backed up by active two-way arbitrage from our larger exchanges in Europe and the United States. We also wanted to address the issue of exchange fees, which we hear constantly from clients as a complaint. Especially when they're starting out or when they're trying new programs in trading, when they're trying new trading techniques, they don't like to pay exorbitant exchange fees. So we made a real effort to keep the exchange fees very low on ICE Singapore. And I think, as you'll see, as we go through the contract specifications, you'll see that the exchange fees are surprisingly low. For instance, 2 cents would be the fee in the case of the Mini CNH, which is also fee exempt for the rest of this year anyway. So effectively it's zero right now, but when we do put exchange fees on it, it'll be only 2 cents per contract. The same thing is true, for instance, for dollar index, where our regular exchange fee there is 8 cents. And the dollar index in a mini version is 1/5 the size of the regular dollar index that we have listed on ICE US, which has an exchange fee of $1.30. So easily you can see that to trade the same notional value on ICE Singapore, it's only a 40-cent fee as opposed to $1.30. So we're conscious of the cost of trading for retail investors, and we're tailoring our exchange to suit your needs. I guess it should also be mentioned that these discounted prices and free data don't mean we're running a low quality infrastructure. The infrastructure on the exchange is the same as what you'll see in the big exchanges. We have the same software versions, usually right up to date, sometimes one version behind temporarily when we're doing the regular updates, but it's right on par. Our servers are located in exactly the same location as the ICE US servers on Cermak in Chicago. So we have the same quality hardware, the same quality credit control, the same quality software that's available on all of the other exchanges delivered to you here in Singapore in a regulatory environment that people in Asia are used to working with, and that's the MAS. So when we elected to build the exchange, we built it here in Singapore, and that gives people the regulatory regime that the retail investors in Asia are most comfortable with. And Ming, if you could move on to the next slide. There it is. Okay, we're going to start right out looking at a couple of the contracts that have been reasonably successful for us. The ICE Singapore Mini CNH is a $10,000 notional contract, which is a mini version of the CNH, and it's trading very, very well for us. We're trading, I guess, average daily volume of around 5,200 contracts. The bid-offer spread is tight, and we've differentiated ourselves from some of our peers in this market. As you're aware, it's offered on other venues, but we have liquidity through the first year. On every month there's a price available. The spreads are better, of course, in the lead month, but our market makers are confident in making spreads out the curve as well, which gives us a small advantage over some of our competitors. You can see on the right-hand graph that the bid-offer spread is very competitive during the Asian day. We're working on building the liquidity after the Asian day ends. There's a bit of a gap there for us. But we're bringing that together, and we think that soon we'll be able to tighten up markets on through the U.S. hours as well. But during the Asian day, when Asian retail is most active, it's got a very tight bid-offer spread. And moving on to the next slide. Okay, this is just to give you an idea of the contract specifications that I mentioned earlier. The clearing fees, as you can see, are waived until the end of 2019. That's at the bottom of the slide. And when we do decide to tack clearing fees back on, it's only 2 cents a contract. So it's not prohibitive at all to trade. Ming, if you could keep moving on. Okay, mini dollar index. Dollar index has been an interesting contract for the ICE, and we created it off of the dollar index that has been around since the 70s. And it's been an active contract for us on ICE US on through the years. You'll see that the weighting of the dollar index is interesting. It stays the same. It hasn't changed since the creation of the euro. So that's where when the European currencies converged into a single currency, that weight consolidated all the other European currencies. So it's better than half of the contract is in euro, but then it also has a dispersion into Japanese yen, sterling, Canadian dollar, Swedish krona, and Swiss franc. And this is an interesting contract in that if you're positive or negative the dollar, but you're not sure of which pony to trade, which pony to put in the race, a lot of people like using the mini Singapore dollar or of course the ICE US Sing dollar or US dollar contract, basically because it gives them an overall view without having to sort of sacrifice return if one of the currency that they choose to trade against the dollar under or overperforms. So it's been a popular vehicle. We see it used by some of the commercial traders in China as well when they're hedging deliveries of physical commodities. They choose to use the dollar index contract rather than individual currency contracts because it gives them that general hedge against the dollar. So it's got good commercial use. It's used by the hedge funds and, of course, by speculators. And if you could move on a little bit there, Ming. And then, of course, we have decent and robust volume on dollar index. You can see that on the left-hand chart. And on the right-hand chart, bid-offer spreads that are very competitive with ICE US. So this is a really good contract in terms of its ability to offer retail liquidity throughout the Asian day. Once again, we're working on getting market makers to come in during the evening hours and tighten up those spreads for you. But during the Asian day, it's a highly reliable contract and performs very well. It is also worth noting that, again, we draw liquidity for this contract from the main contract in the U.S. Arbitrageurs are there throughout the day to make sure that the bid-offer spread does not get out of line with the big contract. So as we close that gap in evening liquidity, we should be able to maintain those spreads on a 24-hour basis for you. And next slide, please. This is something that you can ask either your Phillips account executive or you can write directly to the ICE to get. It's the monthly mini US dollar index report. It's just simply a way of overall review of performance over the course of a month, not only for the components of the dollar index, but also for some of the contracts that have a correlative relationship with the US dollar. So you'll see that this report is aged a bit. It's September 2018, but you can see the correlative relationships in the lower right-hand corner here with the monthly change in these contracts versus the change in the dollar index. So it's worth keeping abreast of how the contract is performing. Summary of the contract specs for mini dollar index. Obviously, again, I mentioned the exchange fees. It's only 8 cents a contract. So this is not at all prohibitive to trade. It's got a fairly narrow tick size, US $1, and it trades very liquidly for us throughout the Asian day. Next slide. Okay, now I wanted to talk just a moment about the mini Singapore dollar contract that we just launched. It is not part of the current promotion at Phillip, but it's something that's worth asking your account executive about. We found it to be successful right off the bat, and it's trading roughly 300 to 500 a day. And the last couple of days, we've seen it trade over 1,400 contracts. Again, the bid-offer spread is very tight because it's such a small contract. It is able to be bid offer inside of or on par with it's the larger variant on SGX as well as the forward markets. It offers a very low cost of trading. The exchange and clearing fees, as we've mentioned before, are waived until the end of 2019. The data is free, and the margin for trading this contract is very low. It's $108 US per contract to trade. That's 1.08% of the notional value, which is outstandingly low compared to leveraged foreign exchange or compared to some of the other Singapore dollar contracts that are out there. And moving on, one last chart, I think. Yeah, this is just an illustration of the volume growth. The top chart is obviously of the cash Singapore dollar, the spot Sing dollar, and the bottom chart is the volume growth that we've had in the 20 trading days or so that we've been live with the mini Singapore dollar. It's gone very well for a new contract launch, and we're seeing more and more interest from several different types of brokers and a couple of the market makers that are coming on and participating in this contract. It's quite popular, for instance, here in Southeast Asia with some of the Malaysian players that are trading using offshore accounts, and we expect them to become involved more and more as we go forward on. Okay, now I wanted to just say take a moment to talk a little bit about Mini Brent. I was remiss in putting slides in on the Mini Brent here into this presentation, but I wanted to mention that the volume has been pretty good. It's tailed off from its peak, but it's still trading about 32,000 lots a month or 1,500 average daily volume. The liquidity has been excellent in the early part of the Asian day, a little bit wider in the later part of the Asian day, but it's a contract that you should consider as aggregated liquidity along with its big brother on ICE Europe. So we've seen some real success with the contract over the last couple of years. Liquidity and volumes are building back up again, and we'd love to see you guys come in and give it a shot and give us feedback on how we can improve the trading in the Mini Brent as well as these other contracts that we've talked about tonight. Well, once again, I'd like to thank the people at Phillip Futures for sponsoring this and helping us through this process. And I'd like to also turn it over to our friend Ming Lam. Ming is from Trading Central and has some trading ideas that utilize these contracts that we've just talked about. Ming?
Yes, Vincent, thank you very much. And I am now starting on my part. Hey, welcome, ladies and gentlemen, and friends of Phillip Futures. Hi, I'm Ming Lam, Trading Central. I'm now talking from Hong Kong. And well, today, as you may know, that I am not an economics professor, so that I don't have a lot of theories and book type, something like that. I just focus on what is happening in the market and make some trade ideas and make some profits. Okay, so I hope that today you will enjoy every minute of this webinar. Now, today I will have three sessions. Okay, first of all, I will talk about what is happening in the market, and then I will walk you through briefly some assets, whether it is stocks, forex pair, currency pair, commodities. Okay, and then in part 3, I will talk about some trade ideas using the ICE mini contracts. Okay, so it will take about 30 minutes. Okay, and I hope you enjoy it. All right, let's start. Now, first of all, the part 1, I will want to talk about the 3 main developments that are influencing the financial markets worldwide. First of all, I will talk about interest rates. Okay, maybe all of you know that at the end of July, the U.S. Central Bank Federal Reserve cut rate by 25 basis points. Well, it is the first cut in interest rate cut in more than a decade. All right. At the same time, as you may all know, that central banks around the world are cutting interest rate at the moment. Central banks in Australia, in New Zealand, in Thailand, India, all right, they are all cutting interest rate. And I have to remind you that this European Central Bank, still remember last year, 2018, they say, hey, we are going to raise interest rate in the summer of 2019, this year. But okay, now we are now in summer. Have you seen the ECB cutting interest rate? No. And now they changed their tone and saying that, well, maybe we will use again stimulus fiscal policy, and we are going to cut rate. Okay, you see, the environment is that central banks are cutting rates. Okay, this is the first development you as an investor or trader have to take care of. All right. Okay, now, the second development that you have to focus is the health of the global economies. Okay, now I'm going to show you the PMI, manufacturing PMI of different regions. Now in China, we have now 49.7. Okay, for every PMI indicator you're reading, okay, you have to know that there is a very key level, that is 50. Okay, above 50, we say it is in expansion mode. Okay, healthy. And if it is below 50, it is contracting, reducing. Okay, not good. Now in China, you see, we are below 50. How about Eurozone? Below 50. How about the US? It's just confirmed a few days ago, just dip into contraction region, as you can see, 49.9. Okay, so this is what the major economies are doing, particularly the manufacturing, the industrial sector. All right, not expanding, as you can see. And now this is USA GDP. Okay, we still have 2.1 at the moment. All right, 2.1. And now this is the second development you have to take care of when you read financial news every day. Okay, so the third one is, to me, this is the most important one. This is the one with the most power. Okay, this is the most powerful time bomb for the market, and you have to watch it, focus on it. Okay, every time. This is the trade war between the US and China. Okay, and I remember in the webinar on at the end of June, I talked about this. At that time, we have G20 in Osaka, Japan, and wow, there were story about Donald Trump meeting Chairman Xi, blah blah blah, and all those things. And now, 2 months later, still we have not seen a trade deal concluded. Okay, so you have to mind that also. All right. Now, I'm going to walk you through some markets briefly. Okay, this is a U.S. stocks market, Dow Jones Industrial Average. All right. What can you see? Can you tell me? And a technical point. Now, first of all, I have to tell you what the lines are about. This thin red lines is 20-day moving average. This blue thin line is 50-day. Okay, this green one is 200 days moving average. All right. What can you see? Now the index is being kept by the declining 20-day moving average. Not very good. And in normal terms, whenever we see the index or the price is very close to the 200-day moving average, we have to be very alert. In this case, we are seeing we are bearish short term on the for the moment. Now, mind you, it is a daily chart. Well, all the charts I'm showing you today are daily chart. Okay, meaning that one bar representing the trading of 1 day. All right. Now we are bearish for the short term on US stocks. All right. And I have to mind you that from the top, from the high we saw in July to now, the US stock, the Dow Jones has fallen 7%. Okay, 7%. And for a very healthy bull market, we say that a pullback, consolidation of 7 to 8% is healthy. Okay, so now let's see if this index will keep falling or it has complete a consolidation. All right. Now this is Nikkei, Japan's Nikkei. As you can see, also not very good. We have lower highs, we say in technical terms, and also the index is captured by the decreasing 20-day moving average. Now, this is my hometown index, Hong Kong Hang Seng. I showed you one interesting thing. Yeah. We call this a bearish island. Can you see there is a gap here? There is a gap here, gap on the left and gap on the right. All right. And 3 days later, now this chart is very updated. Okay. And now this gap or this island, we call this an island. Okay, we are chartists. We draw chart all the times, and we like to give some funny names for those patterns. Okay, channel, triangle, bullish gap, bearish gap, and this is an island, just like Hong Kong Island. Okay, this is an island, and now you can see that the index has not yet filled back this gap, and therefore we are holding a bearish view on this index. All right, below that one, we have RSI, Relative Strength Index. Okay, 33 is, we call it below. It is not a neutral one. A neutral one is 50. Below 50, normally become bearish. Okay, maybe you are familiar with this one. This is Singapore's Straits Times Index. Like Hang Seng, it is done. And have you seen that it is approaching to 2019? No, here it is approaching it. Okay, and still we have a gap here, not yet filled. Okay, not yet filled. So we are also bearish on this one. And then now we go to the forex aspect. Well, some friends always ask me, how do you look about, how do you view the euro US dollar? This is the main one, as you saw in Vincent ICE Vincent's slide. Okay, the US dollar index, about 57% of the US dollar index is going to euro. Okay, so this one this euro is very important. And every time, for the past several months, we have all kinds of rumors, stories about the US cutting interest rate. Whenever they say, hey, US is going to cut interest rate, well, the euro give a jump and then returning. Again, give a jump and then returning. And now, yes, you're right, we are bearish. We are bearish on this one. As you can see, again, lower highs. Okay, there is not, we say in technical term, there is not a sustainable rebound for euro at the moment. Okay, we are seeing that it may break 1.1 to the US dollar. All right, and maybe try to find out some economic news about the eurozone, and I can tell you that they are not good. Their economic outlook for the eurozone, as compared to the US, well, it is way bad, worse. Okay. Okay. Next one, quite interesting. British pound. Okay, British pound, and we can draw a long term for 3 to 4 months declining channel. Okay, for the British pound against the US dollar, and we have just turned bullish. Why? Because it has crossed above the upper boundary of a bearish channel. Okay, now maybe you know that just 1 or 2 hours ago, we have a major news, breaking news, saying that UK Prime Minister Boris Johnson has asked the Queen to suspend the Parliament. Okay, this is huge, and you also know that at the end of October 31st, they are going to break away from the EU, European Union. Okay, whether there will be a deal or no deal, quite probably they will break away without a deal. So although we are turning bullish on the British pound from a technical prospect, as you can see, it is breaking above the declining channel. But we advise to set a pirate point, a buy stop point here. Pretty close in view of the uncertainty we are facing in the UK. All right, now let's go on. US dollar, Japanese yen, dollar yen, and well, you can see for the past several months, we have all kinds of political uncertainty and economical uncertainty everywhere. And you know what? The market view the Japanese yen as a safe haven asset, just like gold, and I will show you later. Just like gold, whenever there is some panic, whenever there is some uncertainty, they buy yen. And mind you, now dollar yen has breached the year low. There is we have a low at the start of 2019, this year, at 104.78, something like this. We have breached it already. Okay, so at the same time, we are bearish on this currency pair. We are looking at 104 and 103.4, something like this. Okay, and at the moment, there's no sign for us to view it as a bullish at the moment. All right, from a technical point of view. All right, this is dollar yen. And maybe you are also interested in Australian dollar. Like the dollar yen pair, this pair has also crossed the year low. That is, we have a low, a mark at the start of this year, 2019. It has breached it already. Okay, at the same time, we have a long-term declining trend line here. Okay, from a technical point of view, we are bearish on this pair. And also, maybe you still remember, as I mentioned in several times in my previous webinar, that the Australian dollar, the trader, most of the traders, they view it as a proxy trade for China. All right. So if China is good, well, they are buying a lot of commodities, iron ore, metal, things like that from Australia, and Australian dollar will be good, will be bullish. And nowadays, as you may know, China is in a trade war with US, and there is a lot of uncertainty, and that is why Australian dollar, which we call it a proxy of China trade, is under pressure also. All right. Just a few weeks ago, it broke the very important 0.7, okay, mark, and then it kept dropping for 200 more points. Okay, we are still bearish on this one. All right. Okay, let's go to commodity. This one you may be very interested. We have lots of friends are asking about gold, precious metal. It's very good, doing very well on the upside. And you can see that it has break out several bullish pattern. This is a triangle pattern, okay? And have you noticed that starting from June, it keep trading on the rising 20-day moving average, and now we are seeing it will go to 1600. Okay, 1600. As you can see, all those uncertainties in the market have not yet been removed. Okay, all kinds of uncertainty. All right, so gold will still, as a safe haven asset, will still benefit from those uncertainty. All right. Now this end part 2, and we are going to part 3. Before we go to part 3, I want to show you. I'm very honest, right? I want to show you how our trade ideas did. The trade idea we gave in June. How did they do? Okay, first of all, we have a mini Brent futures. It turns out that we hit the parity point first. At that time, we think there is a double bottom and it's going up. It did go up a little bit, but it reversed course and hit our stop loss here. All right, and mini US dollar index future. Okay, at that time, dollar was on a down trend, and we are bearish on this. Still, it moved down a bit, but didn't hit our target. Okay, it reversed course and hit our stop loss, and then we stop loss. Okay, this is another story telling us not to mess up with the US dollar at the moment. All right. Now our third trade idea in June. Hey, you know what? We hit the first target. This is 6.82. I think it is a little bit missing. It should be 6.8394, something like this. We hit the first target for this US dollar CNH pair. You remember yuan? Okay, US dollar yuan pair. We hit the first downside target before the pair reverse course and hit the stop loss. All right, and I will discuss this later also. All right, so now are you ready for our trade idea for today? Yeah, we have 4 regarding Brent, US dollar index, CNH, and Singapore dollar. All right, Let's start. Now, for Brent, you can see we are now being kept by a declining trend line, which runs from April. Okay, the 20-day moving average is still also acting as a cap, capping the upside of the Brent price. Okay, so from a technical point of view, we want to short this asset, Brent, mini Brent contract. All right, the current price at the time I made this slide, it is 59.51. Okay, we place our stop loss here, 61.5. Okay, whenever the price hits 61.5, we stop loss. Okay, how about our first target? My first target is put in 55.85. Okay, which is the previous low. We saw it in the early August this month. Okay, our second target is 51.95. Now, mind you, the tick size for this contract is 0.1. That is, whenever you see the price here, it move 0.1. Okay, it represents $1 per contract. Okay, in this scenario, we are selling 3 contracts. Okay, at this current price. Okay, if we hit the stop loss. Now, ladies and gentlemen, please listen. I always talk about stop loss. This is very important for trading of all kind. Okay, if you don't put a stop loss, you will stop trading. All right, you know what I mean. Okay, so we put a stop loss. If it hits stop loss, trading 3 contracts, we have a loss nearly $600 US. But if we hit the second target, our gain profit will be over 2,200. Now, I want to talk more about this risk to reward ratio. For this trade, if we lose, we lose 600. If we gain the most, we gain 2,200. You see, the gain should be much more than the potential loss. You know what I mean? Okay. Otherwise, this trade is not worth making. Okay. So we have a small loss. We take small loss. That's why we always say we take small loss and let the profit run. And no, we take small loss, but when we go to the target, we also have to take the profit. All right. So you see, take small loss is always true. All right. Now this is our mini Brent future. I think this webinar materials will be made available by Phillip Futures later. All right. Yeah. And then now this one, US dollar, mini US dollar futures. Okay. Last time I messed up with the US dollar index. I was sorting it, and I took a lesson. Okay. I make some loss because it reversed up and hit the stop loss. And now you can see after the last leg up, we have constructed a very beautiful bullish channel. In fact, for almost a year, it is running on a bullish channel. And our stop loss is located at 97. Okay, and our target is 98.9, and most importantly, second target 100. If you are familiar with the US dollar index, the key point, the most psychologically significant level is the 100 level. Okay, we last seen it. This should be in late 2016 or early 2017 when Mr. Donald Trump was elected as president. Okay, and we are confident that it is going back to 100. As I mentioned before, yes, US U.S. Central Bank, the Federal Reserve, is cutting interest rates. Okay, and also the President Trump say it is not enough. All right, and he is ordering the Fed chair to cut more, and 50 basis point more, 50 basis point for each time. Okay, and yeah, I follow Mr. Trump. Okay, I follow President Trump, and I view that the Central Bank of US is going to cut some more. Although they are, remember, even if the US cut interest rate, it doesn't mean that the US dollar will fall against other currency. Just a comparison, as I mentioned before, look at the Eurozone. Look how they are doing. Look how their central bank, the ECB, is saying. They are saying that, well, they are cutting interest rate soon. All right. So let's just focus on it. Okay. And meanwhile, we are bullish on US dollar index. Hey, mind you, again, the tick size is 0.005 per tick size. That is, whenever it runs 0.005 here, it represents $1 profit or loss for one contract. Okay, now our stop loss is here, and we are looking at 100. Okay, same for all the details. You can look this session. Okay. Now, next we are going to have a look at the renminbi yuan. Okay. This one is a confident trade. I can say for most of the traders now in the market. Okay, the magic number is 7. Okay, when you listen to all those financial news, when you listen to all those officials talking, they are always talking about 7. Okay, that is 7 yuan against $1. $1 can buy 7 yuan. Now $1 can buy some more. Look at this. And yeah, we have two very good looking triangle on technical terms, bullish. Okay, look at this price. It runs for the first triangle and then drum up, and then it consolidate and then fooling around and then form another triangle and drum up again. Can you see that? And now we are placing our stop loss at this level. Okay, this is a breakout point of the last triangle. And now we are targeting on the upside 7.266 and 7.338. And well, in fact, we are quite confident of this trade. And mind you, the tick size is 0.00301. Okay, this is our trade scenario. Okay, so yeah, this is the I think this is the product somehow of the interaction between the US and China, and within the trade war. And the trade war is very interesting, and I advise you, maybe you reduce your time on watching TV drama and just focus on the US-China trade war. It is another kind of drama which you can profit from. All right. Now, this is our trade idea on CNH, the yuan. Okay. Still, we are very bullish on the US dollar. And now, maybe you know it better than I do. It is the Singapore dollar, as Vincent of ICE just mentioned. This is a rather new contract. And why we are talking about this this time? Not just because it is new, but it is significant. Look at this. For 2009, this year, so far, we marked a high at around 1.3836 in late May early June. Okay, since then it reversed course to the downside, and these days it has just returned to that high, and even still it has broken above. Okay, still standing on a positively sloped 20-day moving average here. All right, this and technical term is very significant. Okay, we say we are now buying a breakout. Okay, our stop loss is at 1.38, and we are now projecting the currency pair to 1.4, above 1.4, as you can see. Okay, so now the tick size of this contract is a little bit interesting. Look at this. The one tick is 0.00405. Okay, 0.00005. Okay, and you can figure out how many ticks you can have. You can gain or lose. Looking at here. Okay, this is our trade scenario. Okay. One more time, we can see that you can also see that all these moving average, 20 days, 50 days, 200 days, they are lovely placed. We call it, wow, it is a very good scenario for trading this contract. All right. So as a conclusion, as a summary, let me do a quick summary on the 4 important trade ideas I've just mentioned. We are bearish on Brent. For the mini Brent contract, we are bearish. Okay, we are seeing a declining trend line. Okay, US dollar, we are bullish. Okay, we see the rising channel, the bullish channel, and we project the index to reach 100, the key level of 100. Okay, and US dollars, yuan, we are bullish on this pair, of course, and now US dollar, Singapore dollar, we are also bullish because it has crossed above the year-to-date high. Okay, now it is coming to the end of my discussion today, but I want to give you a little bit bonus. Maybe just give me 3 minutes. Okay, I think you have heard about yield curve inversion. Yield curve inversion. I just want to spend 3 minutes talk about this today. And you see, this is a 10-year US Treasury yield. Okay, it is yield in percentage. It has, well, you see, it has fallen to 1.4 something, below 1.5% for the US Treasury yield 10-year. Okay, what people are talking about today is about the yield curve inversion. Okay, the most important thing they are talking about is the 10-year yield. As you can see here, 10-year yield is 1.4 something, but the 2-year yield is higher, 1.5 something. All right. In a summary, you don't have to figure out what yield curve, blah blah blah. It is difficult. I just tell you, it means the long-term bond yield is lower. It's lower than the short-term bond yield. In this case, this is the mostly monitored pair. That is the 10-year yield against the 2-year yield. Okay, now you can see that the 10-year yield is lower than the 2-year yield. It implies that people say that it implies lower expectation of growth, lower expectation of inflation, and people just extend the theory to saying that, hey, if we have yield curve inversion, something like this, we are going to have recession. Okay, as I told you before, I'm not very good at economy. economics. Okay, I have not studied whether this yield curve inversion will 100% lead to recession. I don't know, but I want to give you some perspective regarding how the yield curve inversion will work along with the stock market. Okay, now last time we have yield curve inversion. Now this is S&P 500. Okay, US stock about against this one is the yield spread. Okay, 10-year yield minus 2-year yield. Okay, now I want to give you some history. Back in 2006, 13 years ago, we had like today. Okay, we had a yield curve inversion, 10-year against 2-year. Okay, what happened? The S&P 500 gained 24%. I don't know whether there was a recession or not. There was one, but not immediately after the yield curve inversion, maybe 20 months later. But just counting on the date of the yield curve inversion, we have a 24% gain in the S&P 500 index. All right, so I hope this is a kind of stimulative. I want to stimulate your thinking. So you have to think about, will the yield curve inversion people talk about every day now will lead to a crash in the stock market or something like this? In fact, I give you some hints. Now, the US Central Bank, Federal Reserve, is cutting rates. Okay, but as you can see, the US economy is relatively stronger than other parts of the world. Okay, stronger than the Eurozone, stronger than China, of course. What would you expect? Cutting rates and relatively stronger economy, and yes, there are higher chance that the stock market will run higher. Okay, so what will be your bet? You tell me. Okay, thank you very much. And this is what I want to tell you today. Any questions, ladies and gentlemen?
All right, thank you so much, Ming. Meanwhile, if you have any questions, please type them in the question box so Ming can pick it up in his Q&A segment. Anything at all pertaining to ICE products, we have Vincent Turcott from ICE to address them as well. So let's just give a few minutes to have these addressed. And feel free to type them down in the question box. You just select the question box on your panel and type them in there. All right, looks like we don't have any questions for today. Thank you so much for being a wonderful audience. Oh, wait, we have one from Mr. Heng. The question is, how do you trade ICE SG products? Well, thank you so much for your question. Please share that Phillip Futures, when you trade with Phillip Futures, you do have access to ICE SG products. And if you're keen to learn more or find out how you can trade ICE SG, you can either just wait one day for a follow-up email, and the details on how you can follow up with us will be provided in the email itself. However, if you like to get in touch with my colleagues directly on opening a futures account, I'm just sending you the email address that you can write to so that we can get you started right away. All right, we have a question from Mr. Eric Tan. What's the sentiment for traders in Asia? Ming, do you have any thoughts on this?
Hi. Thank you, Eric. You mean the sentiment? We are now not in a very good mood because the heavy pressure, the pressure. Okay, we are being weighed down by the ongoing U.S.-China trade war. As I mentioned many times, it is the one with the £1,000, tens of £1,000s of explosive. Okay, and every day it is evolving. I forgot one thing. Thank you, Eric, for reminding me. If you are a very keen investor, you're not just reading financial news. You have to read Twitter. Whose Twitter? Donald Trump, President Trump's Twitter, day by day, and his words, his tweets can move market. And for the past several days, all his tweets were quite negative on the trade war, and it has brought quite a pessimistic mood for the sentiment here. Yeah, sweet.
Okay, Ming, we have one more we have a couple more questions actually. One
Yeah.
more from Eric Tan, which goes like, is the China market still in the bullish trend?
So sorry, what market?
The Chinese market.
Chinese market. Yeah. Sorry, I haven't brought it up. Because we are focusing on the Hong Kong market at the moment. Also, of course, we are also doing research on the Chinese market. For the Chinese market, we are, for example, the Shanghai Composite Index. It is staging a rebound. Yes, you're hearing right. Not down, but up. It is posing a rebound for these several days. Okay, it is nearing 2,900, something like this. But on the long term, we are still bearish on this one because we can see a series, just like the chart I showed you before. It has formed a series of lower highs. Okay. We are not very bearish on China market at the moment, and as I just mentioned a few minutes ago, the uncertainty is quite huge, and you have to exercise caution when trading China share. Okay, China share, and also Hong Kong shares. Of course, we are not bullish at the moment. Sweet.
Okay, we have one more from Hoyong Jing.
Yeah.
Okay, his question is, what would happen if Donnie, I assume that's the great Donald Trump himself, doesn't get elected in 2020?
Wow. That will be huge. That will be huge. Well, you know what? As far as I know, most of the people, the U.S. people around me, think that Donald Trump will win. This is their norm. Okay, this is the set of thinking. First of all, you just look around his rivals. Okay, can you still figure out one or two rivals that can challenge him? For me, honestly, I haven't found one. So it is a norm for the markets to see him elected 4 more years again. So if this expectation fell through, and the market will be in trouble. I can say that. And mind you, Trump has cut tax for most corporate. And as you can see, I don't know if you know it or not. As far as we know, U.S. corporates are bringing back money from overseas, bringing back cash to U.S. and most of them are buying their own stock repurchase for their own company. Okay, so if Mr. Trump fails, which I think the chance is low, well, market should be on the downside. That's it.
All right. Ming, thank you for the insights. Trump's policies have certainly been very friendly with the businesses. It'll be a very interesting 2020 indeed. Coming up to our last question of the day, I believe you have touched on this subject a little bit today. How will the unrest in Hong Kong affect the stock market?
Good question. Good question. And negative, should be negative. Yeah. You see, when there is unrest, capital will move to area with less unrest. All right. Maybe to Singapore. And yeah, you are right.
I was thinking the same thing, Ming. I was thinking the same thing. It's going to come back to Singapore, hopefully.
Sure. So negative, sure.
Yes, all right, that's all the time we have today. We should be sending you a follow-up email tomorrow, and you will be having a link to the recorded webinar so you can revise what we have covered today. Meanwhile, thank you for being a wonderful audience. Do stay tuned for our upcoming webinars. Have a good night.
Thank you. Bye-bye.